Hello, everyone. Welcome to one more stream. I'm Alex Jake, and together we're going to continue our previous stream on how we are going to build our trading our SMC strategy. Sorry. In the previous stream, we discussed all together about how we build our trading story, how we analyze the markets, how we build our trading story, because it is really, really important how we build our story, my friends. Never forget this, because it is about 80% of our whole trade if we have built our story correctly. Never forget this. Of course, now I am sharing my screen. Give me 1 minute to fix things over here, because I am not used to doing all this, to be honest. Okay. 1 minute more, annotate. I don't want to let. Okay, really good. This was the previous, we were looking, the previous drawing I made, where I was explaining how we are building our story mechanically. Because why? Because if we have a mechanical procedure when we build our story, we will always make our story the same every time. It is really important. Never forget that we are playing a possibility game, and we must all the time bring the possibilities towards us. Now, I will continue discussing about the entry models. First, I am going to introduce you to the price action entry models, and after that, I am going to show you how we can implement our indicators in order for us to make our lives easier. Now, I will begin. First of all, you can see I have made 3 drawings over here, where in my first drawing, I forgot to say, sorry, that of course, all these entry models, all these price action models can be used in any time frame you want, my friends. Never, never, never forget this. Why? Because SMC is, we are building a higher time frame trading idea, executing in a smaller time frame. This means that if we want, we can of course trade the same trading idea in a higher time frame. Okay. Now, look what I have done. Unfortunately, I have drawn only long examples, because to be honest, I like more to take longs than shorts. That's an information I'm sure you don't need. Now, look, so do I. Yeah, saying I don't know. I understand the patterns better, I think. Although I must tell you that in 2008, all the traders that began at that time were all short biased, because the market was falling at 2008. And after that, most of the traders are long biased, because they were taking all the time longs, because the market was only going up in the higher time frames, of course. Now, look, my friends, this is the example number 1. This is a more copy trail, more ICT style, because as you see, I have entered, I have put to enter from an imbalance. Look what price is doing. We are doing lower lows. Suddenly we have a change of character. This is a more aggressive entry. Why? Because imagine that this is from a higher time frame idea, and this, for example, is a weekly. Let's put that this is a weekly demand. Okay. To enter so fast after only a change of character, it is much more aggressive than entering after an extra confirmation. Okay. But it is a type of entry that in SMC uses. It is the aggressive part where they only wait for a change of character and enter. I believe this entry model is more useful for higher time frames, for example, from the 15-minute or even the half an hour. And everything, of course, I'm telling you here is my personal opinion. Anything here we are talking about is not a financial advice. Make for sure your own research on what I am telling you here. And this stream is only for educational purpose. Now, this is entry model number one. This is an aggressive type, as I said. We have two types. We can either enter from any balance that caused the change of character and cover the low for any liquidity sweeps that might happen, or we can go to the next entry model, or we can use the balance as a magnet and enter from the demand that caused the change of character after, of course, the reaction of the higher time frame zone. Remember, my friends, this is the more aggressive part of the entry models. We have much more safer methods because, trust me, I have done these mistakes multiple times, and I know that it is really hard for our psychological side, for our mind, to have a 20 or a 25% win rate, because trying to be so aggressive with so small stop losses, you will be smacked many times. Amen. Yes, Roxy, yes. It is true. And I'm trying to be as much transparent I can be with all of you, because I have passed all these difficulties with SMC. I have trying all the time to share my ideas because I couldn't handle to be smacked from the markets all the time. My mind couldn't handle it, my friends, couldn't handle it. Now, let's say one more time. This is an aggressive entry where we enter directly after a change of character from the balance. This is the same example, but we are entering from the demand that caused the change of character. And of course, the same entry model will form from the opposite, and we will enter from the supply or the balance that caused the change of the bearish change of character. Okay, now here is the most safe entry. And the safe entry is to enter after we have an internal break of structure. Why, my friends? Can you please tell me why should we choose to enter after an internal break of structure? Do you have in mind why we would pick to do this? Can someone answer? Lalex, very good. Very good. Of course, Miss Navy, I was sure that you knew the answer. Mohammed, very good. Market effects, of course, correct. Trend confirmation, Pickles, you are all correct. Well done, my friends. Why? Because we confirm the trend. Really good. This means, Bruce said, sorry, could have been a sweep, no, a choke. I agree, my friend. That's why, because, my friends, we are playing a probability game, confirming with one more confirmation. After we have built our story, after we have weighed our entry model, this is one more confluence and bring one more percentage to our side in order to us to take a trade. Congratulations to everyone that answered correct. I was sure, Miss Navy, that I really enjoyed your answer. Thank you, my beloved wife, for bringing me coffee. Thank you. Now, I was sure because I must say at this point, Miss Navy is a trader that I really admire. She's a really good trader. Also, Jeremy, that they are a trading couple. They're two really good traders that I really respect, and trust me, whatever they say, they are really, really, really responsible, and of course, they know what they are saying. Let's continue, my friends. I prefer these entry models. Why? As I said previously, we are playing a probability game, my friends. And this brings even more probabilities towards us, confirming one more time the trend. As I said, if you're not feeling comfortable with the lower time frames, then this is also can be applied to higher time frames, where one more entry type, of course, could be from the demand over here. I will put also to see it here. That we could also, when I find it, okay, where, of course, we'll make one more line over here. That price might go down here, mitigate this zone, and then go up. Now, what we have seen in these two situations. One, I was playing my capital more aggressive, and here I'm more safer, because at the end of the day, I will never be bored to telling you all that we are first risk managers, and after that we are traders. Can you answer me one more question, my friends? Where would you risk 1% of your 1 million capital? In number one, number two situation, or in number three? Remember that we will take 1% of 1 million account. Miss Navy, yes. Number three, of course, my friends, of course, number three, of course. Why? I will never be bored to tell you this. I would say three, my friend, same. I would say three, because we must be as much as safe we can be. Now, I would also want to say you that here comes, I want to, this is more cleaner, I will prefer this, although, no, I will stay here and I will erase this. Now, I would like to build upon this. Look, my friends, we have built our story. Let's do it again. I'm drawing some examples that, of course, can be applied in any, Of course, they can be applied in any time frame. I'm using this just hypothetically. Now, let's suppose that price mitigated this higher time frame zone that can be a daily, a 4-hour, a 15-minute, and we saw this change of character at this point. Let's make a drawing. I prefer this one. And we saw this change of character at this point. Remember that our trading idea from previously was that I am expecting price to go up because the 4-hour time frame, for example, is bullish, the daily time frame is bullish, and this is a 15-minute shift on the order flow. That means that we have aligned the 15-minute, the 4-hour, and the daily. Now, can you please tell me how many possibilities in percentage do we have at this point? Do you know to answer? Excuse me for the coffee, because we are here to learn trading and we are not here to learn mathematics. I will tell you that at this point, we have 60% towards us. Why? Because market structure is by statistically proved that when all the time frames are aligned, we have 60% to win a trade. But we have 40% of the 100% that we might lose at this point, my friends. That's why I added at this point, because this waiting for also the internal break of structure, we get one more confluence. At this point, we have also in a smaller time frame, what? We have a demand chain. What is a demand chain? A demand chain shows us that demand or supply, of course, this is an example for longs. You will also imagine that this will happen for the other side, and this could be a supply zone. I hope that I'm explaining all of this, what I'm saying, as clear as I can. As I have told you in the past, my English aren't the best. I'm trying, although. This is, as I said, a demand chain. This exactly is the first level of respect. This is the first level of respect, my friends. This is the first level of respect. The first level of respect is where although we have seen a change of character, what do we want to see? We want to see the opposite side to take control, and it will take control through chasing hands. This means that after we see this level, this demand being respected, reacting from it, creating at this point the internal break of structure, then we are going to search for our entries. And here, my beloved friends, we can choose whatever we want after we see a pullback. Why, my friends? Why are we going to wait for a pullback? Because this is how price action and price moves and works. Do you agree with me? Price action, price in general, moves in waves. Whatever goes up returns, whatever goes down goes up. And because we know that price must pull back in order to have a healthy price action, we will wait for price to pull back. And here, with any indicator we have back tested all this time, we can enter at this point, waiting just for an alert at any time frame we want. I hope that I am not confusing you even more. I know that Miss Navy has also explained you very, very well what a market shift means. Trust me, ICT uses market structure shift. I use the name change of character. Miss Navy uses a green box. Jenks wants to see a fractal break, also RT. Look, my friends, that we are all seeing the same thing. And what is the same thing? This, my friends, is what Christie would call it a breakout. Oh, sorry. This is a breakout from this consolidation zone. What are we trading? We are trading the breakout of the green box, of the consolidation zone, of the accumulation zone, I will tell you, because this is clearly Wyckoff. Okay. I will never go in depth in Wyckoff because I'm sure that you will all be 100% confused. I don't want this to be confused. I don't want you guys to be confused. But this, my friends, is accumulation. And we are playing the breakout. Imagine how easy your life would be not setting at this point a limit order or waiting for price and see this happen and being stopped out. Because when you try to trade price action, of course, you have this. Why? Because we all know the concept of liquidity. And it's really easy for us, my friends, at this point, for us to be liquidity and this low that was the first level of respect to be the inducement. This, I also saw the video from Miss Navy, really good, about liquidity. Look, many SMC communities, my friends, use this, the inducement concept, for their entry model. I don't prefer it because, as I have mentioned you in my previous stream, that I use liquidity only for targets. I don't use it in order for me to enter a trade because I've been using a concept that is called DR, IDR currently in my trading strategy now, that I will explain you even more in my next stream, because it helps me determine my bias more easily. And trust me, we all need less hours on charts. As much as we are in front of a screen looking at price action, the only thing that it will cause us is to do many mistakes. That's why I searched a lot to find a system that will keep me less in front of the charts. And this was caused from DR IDR, where I can go down to, let's go, here we are at Euro USD. I would like to tell you at this point, this is an additional that we're going to tell We're going to speak even more in depth in another stream. What is this? This is a loss, of course. Let's open at this point. This was a break even I took in the morning in my challenge. Look, my friends. I will take back, let's erase this. Let's hide it because we have to journal. I will journal it. Now, look, my friends. Look at this point. I will go back price. Now, look what the DR, this is the DR level, the straight line. It means that it is the first hour of every session from week to week. And the dashed lines, the red dashed lines are the IDR, which is I'm sure I'm using this phrase incorrectly. I think it is with is or which is. I am not sure. From body to body, from the candles that have been formed in the first hour of each session. Why are these levels so important? I will not tell you at this point because I know that we have a lot of information together. I would leave it for the entry model part 2, where I will have live examples how I would enter a trade using the DR and the IDR concept, either with indicators or without. Now, to continue explaining what the IDR and DR level is, my friends, we know that price is moved from institutions. You and I don't have the power to move candles. Each hour, every session, the SLPs, the liquidity providers that of the market, that their job is to provide liquidity, so Goldman & Sachs and Deutsche Bank and all the other trading firms, banks, etc., be able to trade. All the SLPs reset their orders during this first hour. And what happens after the hour is complete? They execute, yes, SLPs. Give me a sec to check SLPs. If you Google it, you will find it. It's liquidity providers. It means, if I Google it, I have pinned it to say it to you, but you got me unprepared, my friends. Signement, 1 minute. I have taken a photo of it because, as I tell you, supplemental liquidity provider. Very good. Yes, yes, yes. Thank you very much, Jenks. Thank you very much. You're always very, very helpful. Thank you so much. Now, to continue. As I told you, the SLP, the liquidity providers, have an algorithm, but what is the job of the algorithm? How do you think that the markets move? Do you believe that IC markets, for example, executes its trades directly to the trading floor of London or the trading floor of New York? No, of course. They send their orders to the SLPs, and the SLPs price and execute their orders. This is how the algorithm works. I hope I didn't confuse you truly. And why did I told you all of this? Because, as I said, in the first hour, the SLPs gather all the orders and use the DR. This is a drawing. Of course, the SLPs and the Deutsche Bank, that trade institutional, don't see this. This is the, I think the candlestick is the third or fourth level of the true executions of the markets. So, of course, we are seeing the orders very late, but these levels are the most close to the real, how can I say this? It's the more close presentation of how the institutions see on their boards, okay, and execute the orders. Now, of course, this concept is not mine. Yes, it is the DR IDR version 1.5, and it is created from the master who is, he calls himself the creator of this. He is, for me, but it is a concept that is not so new. It exists from the early days of electronic trading, when, to be more certain, when trading became electronic, that it was guided from computers. This was, he started working for a big institution where he says, he claims, and of course, in this world, we have to believe whatever they tell us. He was one of the creators of the algorithm and has developed this system because he wants to give back to all of us. Inspired from ICT, he wants to help us look how a true institutional trader sees the market, sees the market. Now, this is what I'm going to tell you. The master has, as he says, of course, he has 20 years of data. I have seen with my own eyes the numbers. I have no access to see that he indeed has 20 years of data, as he says, but I have seen with my own eyes after 6 months that what he says has indeed many, it is true. I don't know if it is so true as he says, but I have seen by myself that indeed it works. He says that if we have a break of one side of the DR levels, we mean the DR level, we mean this straight line, that we have 80% probabilities that this law won't break. Yes, Roxy, yes. Break with a 5-minute candle to clarify, yes. During the session that forms. For example, during we are looking at this current time, the London session. This means that it will respect this law for the London session. When we go to the mixed, it is a new reset because we are getting ready for the New York session. yes, any session. The DR concept works in Asian session, the London session, and the New York. And the master calls the Asian session ADR, the London session ODR, and the New York session RDR. I think Jason mentioned this to me once already. He probably has mentioned it because I have mentioned also a long time ago when I was first experimenting with this concept. But why am I telling you all of this? Because, and trust me, it doesn't end over here. There's much more to add upon this. Look how easy we can search for a small 2RR trade using either a clear price action. For example, here we had a break. What do we expect after the break? We expect the respect of this level. Okay. For example, we will respect for the respect of this level, and very easy, for example, enter from this point just with price action. Of course, here we can build and imagine that if this is a 5-minute chart, we can go very easy to this chart. I can't now currently, and implement the number 3, for example, entry model, and be even more safer, and to be even more, as I am currently trading for strategy wars, to wait for an indicator signal at this point. And let's see what will happen. Look what I had over here. I had a Stairmaster signal. Okay. Of course, I will say one more time, this is only for educational purposes. If you don't backtest this by yourself, please do not try it, because you must know and understand that backtesting is not a bad thing we older traders put you to do because we want to punish you. We do it because our mind needs to believe in what we're going to trade. And the only way for us to believe is to see it many times. Roxy said really nice now. There are different ways to enter, is what I think he will show. Really nice. What is the target? Really nice answer, my friend saying. The target can be multiple things. The target can be, wait 1 minute, can be either, for example, a liquidity point that can be over here. And if you entered at this point, you will go for a really good one to, no, we can go for zones, liquidity, this is 1.3. Of course, if we enter in a smaller time frame, we can even smaller, or we can use the concept of the standard deviations that I personally use at this point when I don't have a liquidity target. I hope you all know what a standard deviation is. If we take our fibs, it is levels, and I draw it from the dust lines from IDR to IDR. And you see, I can set a target at 0.5 standard deviation, or the 1 standard deviation, but at least I want to go for 1 to 2. If I measure that my trade, as in this example, doesn't go for a 1 to 2, I won't enter the trade. Okay. I won't enter the trade because it doesn't meet the criteria that I have. I will never go for less than 1 to 2, me personally. Do you have any questions, my friends? I know I have confused you a lot, but we will be here to discuss even more, and I will explain to all of you in depth even more what the DR IDR concept is. It is a concept I have studied a lot, and I will continue to study because it is very interesting, because from the first moment when I saw that it helps me to bring the probability game towards me using the statistical side of trading, I was in love with it. Let's see the questions. Shane says, does it line up with the liquidity to the left? I don't know if in this current situation, but I believe it does. Look what happened over here. Look, my friend Shane, look what happened over here. It almost grabbed this liquidity. Let's see what happened. Yes, by the tick, I think it took it. This means that it aligned. And of course, what the target you're going to put is what we are going to discuss in future streams about our targets and how we manage our trades. But all the concepts can be used if they fit your trading plan. You enter on the boss and not wait for a pullback. No, I wait for the pullback, me personally, because at this point, I personally go down to the lower time frame, and if everything aligns again, because we have 80% probabilities, yes, that this will be the low of the session, but we also have that I was keeping this, but you made me to say it, Trade Monkey. We also have 85%, 90% that after the break, look, my friends over here, if this was the high, what happened is this, if this is the high after the break of the DR level, we have 90% probabilities that this high will be broken. As it happened, even though, look, it broke 90%. Okay. You are doing great. Just zoom out and show with respect to liquidity points, please. Okay. Okay. Thank you, Roxy, very much. Zoom out and show with respect to liquidity points, please. Yes, over here. Look how it took all this liquidity of this point over here. All this internal range liquidity reacted, created an equal high. And if I go even further, let's see what happened. It pulled back. Look where it broke. This line is after London ends. Do you see? The 2RR, is this approach best for you? The 2RR you mean? No, it is a personal preference. I know traders that are very successful trading the 3RR. Christy and many other, for example, in the community, are really good and very successful taking 1.5 point RR. It's what makes you feel powerful, my friend. Remember what I told you now. If taking 1 to 2 RR makes you feel powerful, take 1 to 2 RR, my friend. Sorry. Bruce said this. Roxy, the standard deviations, how often do these play into liquidity points? Is there much interaction relation between the two? I believe, and after 6 months, yes, Roxy, I believe that there is an interaction. And in future trades, I can tell you that I have seen in indices that when we have a break in the first hour after the box has been created, we have guaranteed that price will go to 1.5 standard deviation, especially when we have a liquidity above or underneath. And saying, enter on the 1 minute right. Can we see the pullback and entry? At this point, we see that it didn't give us. That's why I go down, because if I enter directly from the 5 minute, I would have lost at this point. But let's go back. Let's go to the 1 minute and see what would happen. I will remove Stairmaster for now, because what do I want to see? I want to see again a change of character. Correct? Correct. Do you see anywhere, my friends, a change of character? No. Now this, as I said the last time, can you please tell me, is this a change of character? Can you answer? Is this a change of character based on the rule I told you the last time? Of course, if you remember the rule I told you last time. I told you last time that in order for us to consider a change of character, we must see the break of the latest internal higher low that caused a lower low. In this situation, which is the high that caused a new internal lower low? For me, it is this. And at this point, I don't have a change of character, my friends. Okay. Now, this means no trade for me. If you were too aggressive and took this as a change of character, you would be smoke at this point, trying to catch a trade at this point. Okay, do you see saying why I am not entering? I'm Trade Monkey. I'm confused about your entry. Can you show it again, please? Trust me, Trade Monkey, I will be even more detailed in the future. My entry model would be, if I would enter with clear price and with pure price action, I would want to see, after I have confirmed my bias, and in this situation, we have confirmed long after this point. This means I'm searching only for long, but what do I want to see after that? I want to see either a change of character and an internal break of structure and enter with my type 3 entry model, change of character, internal break of structure, 1 to 3 RR. For example, I would like to see this in this situation. This, and I would enter from this point to go up. One, 2, 3 RR. Okay. Why? Because at this point, I would have a change of character. Above, I would have an internal break of structure at this point. Okay, internal break of structure. Okay, let's put this line. Okay, and I would enter from this point over here. I would probably enter from the imbalance that would have formed over here that caused the internal break of structure. This is how I would trade in my normal trading days, my friends. And of course, if I would enter with Stairmaster, here I would take a loss because I would wait patiently for a Stairmaster signal to sign long. I would probably enter at this point. I would have covered this low with a 6 pip stop loss. Okay, I will go for, of course, my 1, 2, 3, and I believe at this point I would have been smoked. Yes, I would have been smoked. Is there always any balance, or is it a zone? I believe at least at 80%, there is always any balance, my friend. And if I see that price, for example, comes to my imbalance too aggressively, I would be even more patient and wait for price to shift again. I don't know if you found value in this today. I hope. Market effects. Thank you so much. Thank you so much. Thank you, Shane. Thank you very much. Hello, Alejandro. Hello from Greece, my friend. I am from Greece and you are from Costa Rica. How do you determine direction? If you go back and watch again the stream from the beginning, you will see how I determined in this certain situation, you will see how I determined my bias. I used DR, IDR. Okay. You did great. Thanks, Alex. Thank you, Roxy. I really appreciate it. We thank you all for what you are doing for us. You are doing a remarkable job, you and Alf, in the mindset room, and you're such an amazing trader. I really admire. Congrats for everything you are doing for us. Thank you too, Roxy. Trust me, from the first second I met you, I was sure that you are just like me, loving knowledge. You know that knowledge is power. That's we are such a powerful community because we believe in knowledge, my friend. You will never find anywhere this knowledge all together, nowhere, trust me. And if you will find it, you will pay many, many, many dollars, trust me. Thank you, Shane. Thank you. Thank you. Thank you, Phil. Thank you. I really appreciate it. Market effects, I will be here. Trust me, for all of you. I need to drink some coffee. Best site ever. Thank you, Trade Monkey. Thank you. Excellent session, Bruce. Thank you. Thank you so much. Thank you so much. Really enjoy your teaching. I really enjoy having you, all of you here. As I have mentioned many times, you really make me feel alive, my friends. You really make me feel alive. Do you have any more questions so we can wrap it up? Current charts, can you tell me, bro? Current chart, can you tell me? I will take a look. 1 minute, please. Do you post a link to the full video later? This is my first. Of course, my friend. All the sessions, all the live sessions are recorded and they are uploaded in the TTF site. You will find the link when it will be ready and uploaded. Alex, please pin earlier images of the entry model. I will do that. It is easy. It is easy. I will do it. This is the entry models. This is the price action, of course, entry models. Okay. In the next, we will do the even more with examples on the charts. Thank you so much. Thank you so much. Is the exact setup happening on GPP, JPY? No. Let me see. Let me see. Roxy, Alex, can you post the entry models to the markup room for people to reference? Of course I will. I will need a small help for that, Roxy. Let's see. Yes, we have a confirmation at this point. We have a confirmation at this point. What we will wait for price to pull back at this point. You see, we have a lot of imbalances at this point, and you can search because based on the DR IDR concept, this will be the low of the sessions by 80%. This doesn't mean, although, that we will make a 10 or a 20 RR trade, but the rule will be confirmed because if price does this, for example, the rule is still valid. Okay. Okay. Someone asked me about the current price action on EU. We are at the current phase. We don't have a confirmation yet. We are waiting at EU for a confirmation. If we see a confirmation, of course, from the upper level, we can also assume the same thing, that this will be the low of the session. So we will search for about 5 minutes. 5 minutes, what did I say? We will wait for price to break from the upper level and then return and go up. Okay, 5 minute GU, let's see. At GU, although we have a confirmation, and this means that we will see if the rule stays true. Look, although there is also the rule of the false day, that price can indeed come and break from the downside. I will teach you, my friends, to also involve in the markets when we have false days. This is for the future, so I can continue to make my streams. Any more questions for me, my friends, so I can wrap it up? I hope you found value one more time. Let's see. Do we have any more questions? I hope you really enjoyed it. Rob, thank you so much, Alex. Thank you too, my friend. Thank you for being here. Everyone, from the bottom of my heart, I really thank you for being and supporting all of this effort. Thank you so much. Thank you. Thank you, Adam. Thank you. I really appreciate it. Angelos, thank you very much, my friend. Thank you. Thank you, Bruce. Thank you. Thank you. I really appreciate it, Angele. Thank you. Σε ευχαριστώ. That's thank you in Greek, my friends. Ευχαριστώ. If you want, we can also do some Greek lessons and teach you some Greek if you want. Adios, amigos. Thank you, Pickles. See you. Marios. Marios is also Greek. Και εγώ μέσα είμαι. Let's go. I will end it right here now because I see that you don't have any questions. Thank you very much for joining one more time. Thank you. Thank you so much. Thank you. Thank you. Thank you.